Topic: DSP Asset Managers launches India's first BSE Sensex Next 30 Index Fund and ETF. 1. Overview. DSP Asset Managers P. Limited, a major mutual fund provider in India, has introduced two new investment schemes: DSP BSE Sensex Next 30 Index Fund, DSP BSE Sensex 30 ETF Exchange Traded Fund. These are designed to track the performance of the BSE Sensex Next 30 Index, which includes 30 large companies not part of the BSE Sensex, but with strong growth potential. NFO dates January 10th to January 24th, 2025. Key features: minimum investment 100, both lump sum and SEEP. Opening NAV 10. Asset allocation 95 to 100% in equity, BSE Sensex Next 30 Index, 0 to 5% in cash and cash equivalents. 2. Key concepts explained. A. BSE Sensex Next 30 Index. The BSE Sensex tracks the top 30 companies based on market performance. The Next 30 Index consists of the next 30 largest companies, offering potential for high growth. Sectors covered include financial services 19%, consumer discretionary 18%, commodities 18%, energy, healthcare 10%, FMCG 8%, and industrials 8%. B. Mutual funds ETFs. Mutual fund, a pooled investment managed by experts. Investors can invest through SIP or lump sum. ETF, traded like stocks on stock exchanges, offers transparency and lower costs compared to traditional mutual funds. C. Open-ended fund, allows investors to enter and exit at any time, no fixed maturity. D. Portfolio reconstitution, adjustments to the index composition are made every 6 months to ensure relevance and alignment with market trends. E. Net asset value, the price of one unit of a mutual fund or ETF. Starting NAV for this scheme is 10. 3. Potential exam questions. A. Multiple choice questions MCQs. 1. Which AMC launched India's first BSE Sensex Next 30 Index Fund and ETF? HDFC Asset Management, B. DSP Asset Managers, C. ICICI Prudential, D. SBI Mutual Fund. Answer: DSP Asset Managers. 2. What is the minimum investment amount for DSP's new schemes? A. 10B, 100C, 500D, 1000. B. Answer: 100. 3. Which sector has the highest allocation in the BSE Sensex? Next 30 Energy, B. Consumer discretionary, C. Financial services, D. Healthcare. Answer: C. Financial services. 4. What is the NFO period for DSP's BSE Sensex Next 30 Index Fund and ETF? A. January 15, 2025. B. January 10 to 24, 2025. C. January 5 to 20, 2025. D. January 15 to 30, 2025. B. January 10 to 24, 2025. 5. What percentage of assets will be allocated to equity in DSP's new schemes? A. 75 to 85%, B. 95 to 100%, C. 50 to 60%, D. 80 to 90%. Answer: 95 to 100%. 4. Nation. Topic: CB grants license to Strata for SM REIT. 1. Overview. In January 2025, the Securities and Exchange Board of India, SEBI, granted a license to Strata Capital Management PV Ltd, SCMPL, for its small and medium real estate investment trust, SM REIT, named Strata SM REIT. Purpose: to provide retail and institutional investors access to premium commercial real estate properties in key locations. Key roles: Strata Capital Management will act as the investment manager. Axis Trustee will serve as the trustee. CB's previous approvals: similar licenses were earlier issued to Property Share, Repl, Rudra Bishek Enterprises Limited, and Emberstone. Strata's plans: list assets worth 2,000 crore by FY 2025-26. Launch up to 6 SM REIT schemes in FY 26, introducing one scheme per month. 2. Key concepts explained. A. Real Estate Investment Trust, REIT. A REIT is a company that owns, operates, or finances income-generating real estate. It allows individual investors to earn dividends from real estate investments without owning or managing physical properties. B. Small and Medium REIT, SM REIT. Introduced by CB in March 2024 to encourage smaller-scale real estate investments. It lowers the investment threshold, making real estate accessible to small and medium investors. Features of SM REITs: Investment size. Real estate assets valued between 50 crore and 500 crore. Investors must have at least 200 investors, excluding the investment manager and associates. Minimum investment, 10 lakh per investor. C Strata SM REIT advantages. Provides opportunities for fractional ownership, where investors can own a fraction of premium properties like offices, malls, or hotels. Enhances transparency and ensures adherence to CB regulations for safeguarding investor interests. Hash 3. Potential exam questions. A. Multiple choice questions. And 1. Which organization granted a license to Strata for SM REIT? ARBI. B. CDARD. D. IRDA. 2. What is the minimum investment amount for small and medium REITs? SM REIT. So 5 lakh B, to 10 lakh, C by the 1 lakh, D 50 lakh, B to 10 lakh. 3. Which company will act as the trustee for Strata SM REIT? A. Property Share, B. Axis Trustee, C. Emberstone Rudra Vicinity. Answer, B. Axis Trustee. 4. What is the maximum asset size for SM REIT investments? A. 50 crore, B. 500 crore, C. 2,000 crore, D. 1,000 crore, B. 500 crore. 5. In which year did CB introduce small and medium REITs? A. 2023, B. 2024, C. 2025, D. 2022. Until 4. Why this topic is important for exams. Banking awareness relevance. SM REITs are regulated financial instruments tied to real estate, a key part of the economy. CB's role. Understanding CB's initiatives helps in exams that test regulatory frameworks in India. Investment awareness. Questions on minimum investment, asset size, and investor requirements are commonly asked in SBI IBPS PO exams. This topic highlights CB's efforts to make real estate investments accessible and regulated, which is important for aspirants to understand. Topic: Grow Asset Management launches India's first Grow Nifty India Railways PSU ETF. 1. Overview. Grow Mutual Fund, an asset management company, AMC, launched India's first Grow Nifty India Railways PSU Index Fund and Grow Nifty India Railways PSU ETF Exchange Traded Fund. Purpose: to provide investors exposure to the Nifty India Railways PSU Index, which focuses on public sector undertakings, PSUs, in the railway sector. Launch details: new fund offer NFO, January 16 to 30th, 2025. Reopens for investments February 13th, 2025. Key features of the ETF and index fund: long-term capital appreciation by investing in equities of companies in the Nifty India Railways PSU Index. Exit load: ETF none. Index fund 1% if redeemed within 30 days, nil thereafter. Minimum investment 500 for ETF, 100 for SIP in the index fund. Asset allocation 95 to 100% in Nifty India Railways PSU Index securities, 0 to 5% in money market debt instruments. Key concepts explained. A. Nifty India Railways PSU Index, a sector-specific index that tracks public sector undertakings, PSUs, involved in India's railway sector. It has shown strong growth, outperforming the Nifty 500 index. B. Exchange Traded Fund, ETF. An ETF is a type of mutual fund that is traded on stock exchanges like a share. It passively tracks an index, like Nifty India Railways PSU Index, and has lower costs. C. Index Fund, a type of mutual fund that also passively tracks an index. The main difference from ETFs is that index funds are not traded on stock exchanges and have a minimum SIP requirement. D. Total Return Index, a method of calculating index performance that includes dividends and price appreciation, providing a more accurate measure of returns. E. Tracking error, the difference between the fund's performance and the benchmark index. Lower tracking error means better alignment with the index. F. Exit load, a fee charged by a mutual fund if an investor redeems their units within a specified period. 3. Potential exam questions. A. Multiple choice questions, MCQs. 1. Which company launched the Grow Nifty India Railways PSU ETF? A. HDFC Mutual Fund. B. ICICI Prudential. C. Grow Mutual Fund. D. SBI Mutual Fund. C. Grow Mutual Fund. 2. What is the minimum investment for the Grow Nifty India Railways PSU ETF? A. 1,000, B. 500, C. D. 50. Answer 500. What is the exit load for the Grow Nifty India Railways PSU Index Fund if redeemed within 30 days? A 2%, B 1C 0.5%, D none. Answer B 1%. 4. What percentage of assets will be allocated to Nifty India Railways PSU index securities in the ETF? A 75 to 90%, B 95 to 100%, 85%. Answer B 95 to 100%. When will the Grow Nifty India Railways PSU ETF reopen for investments? A. February 1st, 2025. B. February 13th, 2025. C. February 20th, 2025. D. January 30th, 2025. Answer B. February 13th, 2025. Ash 4. Why this topic is important for exams. Banking awareness. The topic combines mutual fund concepts with India's railway sector, emphasizing sectoral growth and financial products. SEBI regulations. Understanding ETFs, TRI, and tracking error helps in grasping how financial instruments operate. Current affairs relevance. Launch of India's first railway-specific ETF makes it a probable question in exams. This topic enhances your knowledge of mutual funds and ETFs, a frequent focus area in SBI IBPS PO exams. Nation. Topic. RBI lifts restrictions on Ashirvad Microfinance Limited, AMFL, and DMI Finance Private Limited, DFPL. 1.1. Overview. The Reserve Bank of India removed restrictions on Ashirvad Microfinance Limited, AMFL, and DMI Finance Private Limited, DF, after the companies took corrective measures. Reason for restrictions. The RBI had imposed business restrictions on these non-banking financial companies, NBFCs, on October 21st, 2024, due to charging excessive interest rates, non-compliance with regulatory guidelines related to weighted average lending rates, WAIR, and interest spreads. Reason for lifting restrictions. The companies implemented remedial actions. They committed to adhering to fair loan pricing and other regulatory norms. Key terms explained. A. Non-banking financial companies, NBFCs. Financial institutions that provide banking services but do not hold a banking license. Example, they offer loans, credit, and savings products but cannot accept demand deposits like a bank. B. Weighted average lending rate, WAR. It is the average interest rate charged by a financial institution on its loans. Purpose, ensures transparency and helps compare rates across lenders. C. Interest spread. The difference between the interest rate charged on loans and the cost of funds for the lender. Example, if a company borrows funds at 8% and lends at 12%, the spread is 4%. D. Cease and desist order. A regulatory order requiring an entity to stop engaging in certain activities. Example, the RBI asked AMFL and DFPL to stop sanctioning and dispersing loans. SHA 3. Potential exam questions. A. Multiple choice questions. 1. Which two companies had restrictions lifted by the RBI in January 2025? A. AMFL and DFPL. B. HDFC and ICICIC. Bajaj Finance Housing. D. Axis Bank and SBI. Answer AMFL and DFPL. 2. When were restrictions imposed on AMFL and DFPL by the RBI? A. October 15, 2024. B. October 21st, 2024. C. January 1st, 2024. D. December 31st, 2024. October 21st, 2024. 3. What issue led to the RBI imposing restrictions on AMFL and DFPL? A. Noncompliance with WALAR and interest spread guidelines. B. Fraudulent lending practices. C. Failure to file financial reports. D. Delay in customer repayments. Answer. Noncompliance with WALAR and interest spread guidelines. 4. What is the full form of WALAR in the context of lending? A. Weighted annual lending rate. B. Weighted average lending rate. C. Wholesale average loan rate. D. Weighted asset lending rate. Answer B. Weighted average lending rate 5. Where are AMFL and DFPL headquartered, respectively? A. Mumbai and Chennai. B. Chennai and New Delhi. C. Bengaluru and Hyderabad. D. Pune and Kolkata. SHA 4. Why this topic is important for exams. Banking awareness. The topic highlights RBI's regulatory role in monitoring NBFCs. Lending guidelines, concepts like WALAR and interest spreads are crucial for understanding how financial institutions set loan rates. Current affairs relevance. Recent action by RBI makes this a potential question in SBI IBPS PO exams. By studying such topics, you gain insights into banking regulations, NBFC operations, and the RBI's supervisory role. Topic: PhonePe and ICICI Lombard launch Maha Kumbh Mela Insurance. 1. Overview. PhonePe, a digital payment platform, and ICICI Lombard General Insurance have introduced a special insurance plan for travelers attending the Mahakumbh Mela 2025 in Prayagraj, Uttar Pradesh. Purpose: to ensure the safety and security of travelers during this large religious gathering. Duration of coverage: January 13th to February 26th, 2025. Key features of the plan: 1. Two pricing options: Res 59 per person for travelers using train or bus, Res 99 per person for travelers using domestic flights. 2. Sum insured: total coverage of Res 1 lakh for various risks. 3. Coverage includes hospitalization, doctor visits, and outpatient care. Personal accident insurance: coverage for lost baggage, trip cancellations, missed flights. Repatriation of remains: in case of death, the plan ensures the safe return of mortal remains. 4. Purchase: available on PhonePe until February 25th, 2025. This is a first-of-its-kind insurance designed specifically for an event like the Mahakumbh Mela, ensuring a safe pilgrimage experience. Hack 2. Technical terms explained. A. Insurance: a financial product where an individual pays a premium to get coverage for specific risks. Example: if someone loses their baggage during a trip, the insurance will compensate them. B. Personal accident coverage: provides financial support in case of injury, disability, or death caused by an accident. C. Repatriation of remains: ensures the deceased person's body is transported back to their hometown or family. D. Outpatient care: medical treatment that does not require hospitalization, such as doctor consultations or minor procedures. 3. Potential exam questions. A. Multiple choice questions, MCQs. 1. Which companies partner to launch insurance for the Mahakumbh Mela 2025? A. Paytm and SBI Life Insurance. B. PhonePe and ICI Lombard. C. Google Pay and HDFC Ergo. D. Bharat P and LIC. Answer: B. PhonePe and ICICI Lombard. 2. What is the maximum sum insured under the Mahakumbh Mela insurance plan? A. 50,000. B's 1 lakh. C's 2 lakh. D. Rs 5 lakh. Answer: B. Rs 1 lakh. 3. What is the premium amount for travelers using domestic flights under this plan? A. Rs 59. B. Rs 79. C. 99. D. 199. C. Rs 99. Until when can users purchase this Mahakumbh Mela insurance plan on PhonePe? A. January 31st, 2025. B. February 25th, 2025. C. February 26th, 2025. D. March 1st, 2025. February 25th, 25. Which event is the Mahakumbh Mela insurance plan specifically designed for? A. Ganesh Chaturthi. B. Mahashivratri. C. Prayagraj Mahakumbh Mela. D. Haridwar Ganga Festival. Prayagraj Mahakumbh Mela. Step 4. Why this is important for exams? Banking awareness: highlights PhonePe's collaboration with an insurance company for a specific purpose. Insurance products: questions on unique insurance schemes can be asked in banking awareness or general awareness sections. Current affairs: a recent and unique initiative connected to a major cultural and religious event. This topic is a good example of innovation in financial products tailored for specific needs, which is a relevant concept in financial inclusion and insurance awareness. Topic: UNDC's WESP 2025 report: Indian economy likely to grow 6.6%. 1. Overview: the United Nations Department of Economic and Social Affairs released its World Economic Situation and Prospects WE 2025 report. It projects India's economic growth at 6.6% in 2025, driven by strong private consumption, investment growth. Key findings about India: 1. Growth rate trends: 2024, 6.8%, 2025, 6.7%, 2026. Factors driving growth: capital expenditure CapEx, investments in infrastructure, physical and digital, exports, strong performance in services, pharmaceuticals, and electronics. Public sector role: funding large-scale projects like sanitation, water supply, and connectivity. 3. Inflation control: 2024, consumer price inflation 4.8%, 2025 expected to decrease to 4.3%, aligning with the RBI's target of 2 to 6%. Monetary policy: RBI has maintained its policy rate at 6.5% since February 2023 to manage inflation risks. 4. Comparison: UN projection for FY 2025-26, 6.6%. National Statistics Office projection for FY 2024-25, 6.4%. South Asia and global highlights. A South Asia region, projected growth 2025, 5.7%, 2026, 6.0%. Drivers, India's strong performance. Economic recovery in Bhutan, Nepal, Pakistan, and Sri Lanka. Challenges, weak external demand. Debt issues, social unrest, and political uncertainties, e.g., in Bangladesh. B. Global growth projections 2025, 2.8%, 2026, 2.9%. These remain the same as 2023, 2.8%, and 2024, estimated at 2.8%. C. Country specific projections USA 2025, 1.9%, 2026, 2.1%. Recovery from weaker labor market. China 2025, 4.8%, slightly lower than 2024's 4.9%. Least developed countries, LDCs, growth rising to 4.6% in 2025 from 4.1% in 2024. However, 3. Technical terms explained. 1. Capital expenditure, CapEx. Money spent by the government or businesses on long-term assets like roads, buildings, and technology. Example, investing in metro rail infrastructure. 2. Consumer price inflation, the rate at which the general price of goods and services rises, reducing purchasing power. RBI aims to keep it within 2.6% for economic stability. 3. Weighted average lending rate, WALR, average interest rate charged by banks, NBFCs on loans, weighted by the loan amount. 4. Small island developing states, SIDS. Small islands facing unique challenges like climate change and limited resources. Examples include the Maldives and Fiji. 4. Potential exam questions. A. Multiple choice questions. 1. As per UNDISA's West 2025, what is India's projected GDP growth rate for 2025? A. 6.5%, B. 6.6%, C. 6.7%, D. 6.8%, 6%. Which sector is highlighted as a key contributor to India's economic growth in the WESP 2025 report? A. Agriculture, B. Pharmaceuticals and electronics, C. Real estate, D. Real estate, pharmaceuticals and electronics. What is the projected global economic growth rate for 2025 as per the report? 2.7%, B. C. 2.9%, D. 3.0%. B. 2.8% for. What is the expected consumer price inflation in India for 2025 according to the report? A. 4.8%, B. 4.3%, 3.4%, D. 5.0%. Answer: B. 4.3%. Which agency under MoSPI provides official GDP growth projections in India? A. Reserve Bank of India, RBI. B. National Statistics Office, NSO. C. Niti Aayog. D. Central Statistics Office. And C. National Statistics Office, NI5. Why this topic is important for exams. Economic awareness. Questions on growth rates, inflation, and global comparisons are common in SBI IBPSPO exams. Policy understanding. Understanding RBI's inflation targets and how they affect monetary policy is critical. Current affairs. The report connects India's domestic growth with global trends, emphasizing India's role in the world economy. This report is a key resource for economic and financial awareness sections in banking exams.